SFBs, that is small financing bank. These are type of niche banks in India who, apart from providing banking services like acceptance of deposits and lending, they focus on providing financial inclusions, or that is financial services, to those section of economy which was not usually served by other banks, like providing services to small business units, small and marginal farmers, micro and small industries, unorganized sectors, and provision of saving vehicles primarily to unserved and underserved sections of the population. Also, apart from these basic objectives, they also undertake for the following activities like non-risk sharing simple financial services, which is being distribution of mutual fund units, insurance products, pension products, etc. But for these particular activities, that is non-risk sharing simple financial services, they need to take the prior approval of RBI. This is very important for SFBs to keep in mind. For this non-risk sharing simple financial services, they need the prior approval of RBI. Why I am giving emphasis on this point? Because when we discuss about the red herring prospectus of this Equitas IPO, I'll tell you why this is very important. Now we get a basic understanding about the SFBs. As we all know, in order to run a business, capital is required. So for this particular SFBs, minimum paid-up capital requirement is 200 crores. And whenever capital is involved, inherent risk is also involved. For that, the capital adequacy ratio should be at least 15% of its RWA, and Tier 1 capital should be 7.5% of RWA, and Tier 2 capital should be limited to maximum 100% of total Tier 1 capital. These are the capital requirements for SFBs. Moving forward to promoters' contribution. I have bifurcated into two. If initial contribution is at least 40%, if it's more than 40%. Right now, first we focus on if initial contribution is at least 40% of paid up equity capital. Then this 40% should be locked in for a period of 5 years. Then 30% within 10 years and 26% within 12 years. When I'm talking about 5 years, 10 years, 12 years, this timeline should be calculated from the date of commencement of business. So 5 years from the date of commencement, 10 years from the date of commencement, and 12 years from the date of commencement of business. Moving forward to if promoters contribution is more than 40%, then they need to brought down to 40% within 5 years from the date of commencement. In this Equitas, it's more than 40%. That's why they are coming up with the offer for sale issue also. This is all about promoters contribution. Now we need to discuss about stock exchange listing. Two ways through which SFBs can raise money or list their shares in the stock exchange. First, voluntarily, second, net worth basis. Talking about voluntarily, they need to fulfill the requirements which was set by capital market regulator, that is SEBI. After fulfilling the requirement, they raise money through IPO or list their shares. Second is on the basis of net worth. If any SFB having a net worth of 500 crores, then they need to mandatorily list their shares within 3 years of reaching that net worth. After getting an understanding about what do you mean by SFBs, its capital requirement, promoters contribution requirement, and stock listing procedures, it's good time to move on to understand about the Equitas company. This bank was founded in 2007 by Equitas as a microfinance lender having headquarters in Chennai. Once they received the RBI license on 30th June 2016, it started begin banking on 5th September 2016. But on 4th Feb 2017, it became a scheduled bank. This bank is the second largest SFB in terms of AUM, that is asset under management, after having AU SFBs. In terms of deposit also, this is the second largest bank having a deposit of 90.1 billion rupees behind AUFs having a deposit of 194.2 billion. Talking about the shareholding pattern of this bank, Equitas Holding Limited is the promoter which holds 95.49% while rest was held by public. Why I am giving emphasis on this promoter section? Because earlier in this video where we have discussed about the promoters contribution, if promoters contribution is more than 40%, then as per regulatory requirement, they need to bring down their contribution to 40% within 5 years from the date of commencement of business. So in this case for Equitas, they started their business from September 2016. So till 2021, they need to reduce their promoters contribution and bring down to 40%. That's why in this IPO, they have come up with the fresh issue along with the offer for sale. So after issuing shares or diluting their shares through offer for sale, their contribution should reduce to 82% from 95%. Did you remember this highlighted part which we have discussed earlier in this video when we talk about what do you mean by SFBs? So for any SFBs who want to do any non-risk sharing simple financial service activities, they need to take prior RBI approval. But Equitas small financing bank fails to comply with this requirement, and in year 2017-18 they have to pay 10 lakh rupees as a penalty. Now we need to understand about the financial statements before pitching into the IPO section. Once we're done with the financial statement, we'll move to the IPO part and get a better understanding about the IPO. For any bank, deposits under the head liability and advances under the head assets are the important items in the balance sheet side, because the nature of the bank is basically lending money and receiving deposits, right? And on which they earn the interest on the advances side, and on the deposits they have to pay the interest. So in this bank, if you look into the deposit side, over the years from 2018 to 2020, deposits has increased from 56,000 to 1,07,884. These numbers are in millions. So 1,07,884 million. It increased approximately double in 2 years from 18 to 20. This shows, there's an increase in the CASA ratio as well. But we cannot conclude that increase in deposits leads to increase in the CASA ratio, because deposits do include the term deposit as well, which does not form part of bank deposits, that is for CASA. But increase in deposits plays an important role or beneficial for any bank, because increase in deposits means basically bank get money at a lower cost, which is very beneficial for any bank. Moving forward to the advances side, advances is also increased from 77,000 in 2018 to 1,37,000 in 2020, which is also a good sign, because for any bank, interest income is the main source of income, and if advances increases, interest income increases. But the negative part is, if advances increases, there might be possibility NPA also increase, because few parties may default for that particular loan amount. When we discuss about the company profile, that it is the second largest bank after AU SFB in terms of deposits, so it's a good sign. Talking about the P&L side, net profit is also increased from 318 million in 2018 to 2,105 million in 2019, which is also a great sign, and it increased to 2,436 million in 2020. So there is an upward trend in the net profit. And what contributes the net profit? As I already told you, the interest income is the main source. As advances increases, leads to increase the interest earned. So for the year 2018, it's 15,316 interest earned against the interest expended 6,700 million. And the same in 2020, it's 26,454 million interest earned against the interest expended 11,000. The major chunk of this P&L profit. Along with the financial statement detailed discussion, it's good to get a peer comparison as well. The table in the screen help you understand about the deposit details for financial year 2019. There are n number of SFBs, that is AU SFBs, Equitas, Ujjivan, Utkarsh. If you look into the column 2, which talks about the proportion of deposit to total borrowing. So it's 69% in AUF and Equitas is 69. So it's approximately same. And the second column, it's retail deposit to total deposits. CASA ratio is good for Equitas, it's 28%, while AU contributes 21%. Equitas is third best in terms of advances per employees and fourth best in terms of deposit generated per employees, which help to understand about the operational efficiency of SFBs. The table in the screen help you understand about the operational efficiency of SFBs for financial year 2019. N number of banks shown in the table. So for AU SFBs, it's 75.7 crore rupees per branch, that is business generated. For Equitas, it's 20.8, which is very low as compared to AU SFBs. And if we bifurcated this business, it bifurcated into two, the advances part and the deposit part. So 75.7 contributed by 40.9 by advances and 34.8 by deposits. And if we talk about the Equitas, it's 11.7 and 9.1 respectively. For business per employee, it's 3.1 and 1.1 for Equitas, which is also low. So Equitas need to take a long jump in order to compete with the AU SFBs, because deposits of AU SFB is 195 billion and for Equitas it's 90 billion only. Here comes the IPO part about Equitas IPO. Issue size is 517.6 crores, which is bifurcated into two. Fresh issue, which contributes 280 crores, and the rest contributed by offer for sale, that is 237.6 crores. IPO price band is 32 to 33 rupees per equity shares, and minimum lot size is 450 shares. So minimum you need to pay 14,850 for one lot, and maximum you can pay for 13 lots, which contributes to 193,050, that is 1,93,050 rupees. This IPO will open on 20th October and ends on 22nd of October, and listing will be done on 2nd of November for this particular IPO. What we need to do as an investor, whether we need to invest in this IPO or not. So for that, we need to look into the strength and weaknesses of this particular bank. Talking about the strength, it's a customer-centric organization having a focus on unserved and underserved segments. It is also a well-diverse asset portfolio of SFBs. It's having a strong retail liability portfolio, which is about 15,600 crores. And if you talk about the bifurcation, the home loan contributes 42%, microfinance contributes 23%, vehicle finance 24%, corporate loans 5%, and rest 6%. Talking about the weakness side, due to this COVID-19, the chances of NPA should increase due to this liquidity crunches. Below table will help you understand about the NPAs over the years. Take your call on Equitas IPO based on this fundamental analysis which we have discussed right now. If you find this video helpful, do share with your colleagues or friends and like this video, and if you haven't subscribed my channel, do subscribe my channel. Thank you.